Early in the epidemic, Bill Ackman gained $2.6 billion by correctly anticipating the March 2020 market catastrophe. The World Health Organization labeled the Omicron variation of COVID-19 as a variant of concern. During the Thanksgiving weekend, which alarmed investors on Friday, the Dow Jones Industrial Average fell 900 points, or 2.5%, marking its worst day since October 2020. Oil prices have dropped by 10%. In today's video, we will be talking about Bill Ackman's next bull market prediction. Stay with me to the end of the video to learn more. Now let's get right into it. Wall Street despises uncertainty. According to Monday's CNN Business, before the Bell email and right now is an example of peak ambiguity. According to public health specialists, it will take several weeks to collect enough data to establish a clear knowledge of the new variation, which means investors won't have much information anytime soon. Nonetheless, hedge fund billionaire Bill Ackman believes the Omicron variation may be good news for the U.S. stock market, if the data on the new form isn't worse than projected. While it is too early to have definitive data, early reported data suggests that the Omicron virus causes mild to moderate symptoms, less severity, and is more transmissible. Ackman said in a tweet Sunday evening, "If this turns out to be true, this is bullish, not bearish for markets." Later, he said that it would be positive for the stock market but negative for the bond market. Historically, stock and bond returns were often inversely connected, at least until the pandemic hit. Pershing Square Capital Management was founded and is led by Ackman. Throughout the epidemic, he has gained the reputation of a market prophet. Ackman correctly forecast the timing of the stock market breakdown at the start of the coronavirus pandemic in 2020, pocketing a 10,000% return, more than $2.6 billion in net profit, by leaving his firm short bets just as the S&P 500 bottomed in early March 2020. When the Delta variation began quickly spreading in the United States in July of this year, Ackman stated in a CNBC interview that it would not have a significant impact on economic growth or people's behavior, which proved to be correct. He also projected that interest rates would rise when the economy recovered. In October, Ackman spoke before the Federal Reserve Bank of New York, asking the central bank to taper promptly and begin hiking rates as soon as feasible to combat rising inflation. "We are continuing to dance while the music is playing, and it is time to turn down the music and settle down," he warned in a tweet on October 29. The Omicron variety, officially known as B11529, was discovered on November 24 in South Africa, after infection cases were recorded from numerous African nations as well as Europe. The WHO labeled it a variant of concern 2 days later. More recently, at the end of October, the hedge fund manager urged the Federal Reserve to begin reducing the economic assistance it has provided during the epidemic. He believes the Fed should taper quickly and start hiking rates as soon as feasible. According to the company's disclosures, Pershing Square manages around $12 billion in assets, and the hedge fund was up 27.2% through October and 21.6% net of fees. It came after a stellar 2020, in which the fund returned a stunning 70.2% on net. Ackman has been betting big on a rebound in the restaurant, retail, and hotel industries. His top holdings at the end of the third quarter include Lowe's, Hilton, Restaurant Brands, and Chipotle. He picked up Domino's Pizza shares earlier this year following a pullback. Thank you for staying with me to the end of the video. I hope you enjoyed it. If you did, like and share the video. You can leave your questions and thoughts in the comments section below. Don't forget to subscribe and hit the bell icon to get notified when we add new videos in the future. Thank you for watching, and we'll see you in the next video.